I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to Complete Trader Academy's Daily Review. Today is July 7, Friday, 2023. Hope you had a good week here. So we had this up and down day today, pretty much retraced right back into the previous drop's open range gap and into that inversion daily imbalance right here that we have already highlighted. I said I would want it to sell from up here and then shoot down, and then we're probably going to rush for this. We'll probably get another. The next day we'll probably reach in and then kind of close bullish and then kind of retrace, kind of like what you saw here when we peaked down here, and then we stretched out this next day candle, which this would be coming up Monday. So we just had this candle here, like today, for example, or an example of this candle right here. But I'm talking about this one only because there's liquidity. And then it'll reach down and then close, and then the next day, which will be this day, maybe Tuesday or Wednesday here, then will be like a big bullish day, trying to get back into the new daily imbalance that we have not got into yet. So I'll just draw it out for now, unless the market becomes really heavy, which it could. And then kind of lead into more in here, and then we have to wait longer for this, just kind of like how we got, just kind of like this scenario when we had this big imbalance. You can look at it like this, and it can kind of mosey on down to get into here, and then we get another pop back up for maybe before we come down, or it's just going to be really heavy, and we're just like constantly back-to-back days, maybe one big bullish day, and then we kind of lead into here. We got a gap right there, which I could draw out, even though that's not something I'm looking at right now, just to give you context. And I'll just leave that there. But anyway, so today, after yesterday's big drop and came back up and settled, price sold off again to reach and take out that liquidity there marked, and then shot up then to reach into this zone here, and then aggressively sold off again to take out that low and that structure of it coming down after reaching into this imbalance that you have right here. All right, let's go into a smaller time frame just to make this video over with. And as you see here, that's the opening range gap. So we open up 930 right here. We shoot down first. So all this is news. We got 830 news. Let it play around. And then 930 shoots down, and we have this opening range from here from yesterday's 415 candle closure until 930 this morning. Shot down right for that line. I mean, you can't miss that. Right now, aggressively, you could take a buy right there. It's a high probability. If not, you wait for a shift of structure, which we ended up having here. So price came down, came up, lower high, shot down, shot above it. All right, so now this is the break. And your intention is, okay, well, once the price at 830 spiked up and took out some clean liquidity here, it didn't take out that low, and that's because this becomes like a lower high, right? So we have a lower low, a lower high, lower low in London, then lower high, and then lower low, lower high, and it continues until it breaks here. So now you have lower low, lower high, and lower low. And then as far as the downside goes, we've spent time there. Now the top side is what? Well, you have the engineered liquidity from the 830 pre-session, and then you have this high, plus you have, remember, this imbalance up here that we have, and the zone that we want to come up to and sell from. So this is how it looked like. It wasn't pretty, but this shift of structure was a big red flag right there. and then retraces right back. This is a 5-minute chart, so on a 1 minute, you'll see here. Well, actually, this was on a lower time frame. This was on a 15-second. We had an inversion imbalance here, and then go do the math on that, and then you'll see you'll see it there bouncing from there as a buy, and then taking up for a new higher high. Where's your higher low? Because we're shifting structure, right? And higher low retraces, comes right back to a 70 area, and also dips into this block here, this down block, and in here, and then pretty nicely touches the open of that little block right there, nicely bounces up, retraces, plays around, and then we take off at the 1150 area, almost in lunchtime. Retraces back into this block after taking liquidity there. Every time you see one of these lines, they're entry levels. And there's much more. I can draw many more of them, but this is the main ones I see. And then price shoots up and then uses this imbalance as an inversion imbalance as well, meaning it doesn't trade in it. It just, you want to see it. You want to see it, not trade it in. And sure enough, all these little higher lows with these candles are all entries. You could be pushing the button all this time, knowing and understanding that these are lower highs, and you're off to the races to get into the imbalance up here. And once you're up here, we had a nice sell again. Price comes up, leaves an imbalance on the 5-minute. Let me go to a 5-minute real quick. And then makes an imbalance, catches up, gets into the zone. Let me see if I can scrunch this. Gets into that orange zone, which is right here. Plus, we're in this daily imbalance, blue line, blue box, that you see. So reaches them nicely, and then this purple line was not drawn yet. I drew that afterwards, but because now it reveals what the daily imbalance is. If you look right here, daily imbalance now, that's the high right there that it created for the day. And then the time is now 1 o'clock, 1:30. Program is going to start running at 1:30. Shoots down, comes right back up. On a 1 minute, you can see that more clear. But here, another entry right there. On the 5-minute, you can see it clear here also as an entry. If I went to a 1 minute, you'll see here that price breaks down, shoots all the way back up to that last block. Perfect entry right there. Stop loss is above that. All right. And then you can see this, right? Yeah. And then shoots down again. This, before it shoots down, comes back up into this block right here. That's on the 5-minute. And then shoots down again. You could be a seller from that entry right there. And you are in this inversion imbalance right here on the 5-minute. So when you see these imbalances, it'll come through it, and you expect it to sell from it, and trust that it's going to be holding. And then you'll see here that these blocks, lower low, lower highs in here, these up blocks don't ever get broken on the top side. So every time they go back in it, you can put an entry technically. And then don't rush your stop loss there, but it's now inside the inversion imbalance on the 5-minute. So staying above here on the 50% level, anything underneath you want to look at. This is confirmation of it going down, going through the open of the day. And then they rushed for when then 3 o'clock kicked in, power hour, pushed it in from the open of the day, shot it down for that liquidity, and the day was done. So crazy day, but this is how it panned out. And as far as when the buy today happened, when the 930 came down to here and took this liquidity out, well, you understand that this opening range is sitting here empty. So this wasn't here yet, right? So let's just look at it like that. Price action to the left. If I went like this, put it to regular trading hours, you'll see that 930 pops up. This is completely empty, so then it shoots up, and then it starts to fill up that opening range. Plus, remember, we have the higher opening range that has never been tapped, And again, you have that daily imbalance. So beautiful target for the upside, and that was framing the day. All right, so hope this helps. You guys have a great weekend. Take care, and God bless.